How is everybody doing today? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Everyone might remember just a couple weeks ago, I did an episode on open banking, and I'm really trying to bring a little bit more awareness to this topic. And today I have a very special episode for everyone. Mickey Marshall from the ICBA was kind enough to come on with me and spend a few minutes talking about open banking. I'm so excited to have him here with us because this is such an important topic in the banking industry right now. And with no further ado, I'm going to bring Mickey in. How are you doing today, sir?
Hey, Joe, I'm doing pretty good. How are you?
Yeah, I'm doing great. I'm fantastic. Thank you very much for spending a few minutes to come on with us.
Sure, absolutely.
Okay, so I just want to give the audience, so your title is Assistant Vice President and Regulatory Counsel over at the ICBA. Can you just maybe tell us for a quick second, like what you primarily do every day?
Sure, yeah, and let me just start with an introduction of ICBA for those who don't know. We're the Independent Community Bankers of America. We're a trade association of about 3,000 community banks nationwide. We focus exclusively on the interests of those smaller banks, and our big focus is making sure that regulation that comes out of Washington is appropriately tailored, right? It doesn't make sense to regulate a $2 trillion mega bank in the same way as it does a community bank that has maybe a handful of branches. And so making sure that policymakers in Washington kind of understand that difference, that's our main job. At the association, my role is to basically, when the agencies, so the Federal Reserve Board, FDIC, OCC, come out with proposed rulemakings, they'll come out with these, very long 1,000-page, 800-page proposals in the Federal Register. And basically, my job is to summarize those proposals for our members, get their feedback on these proposed rules, and then kind of synthesize that feedback into our formal comments that we then send to the agencies to try to improve the rulemakings and make sure they account for community banks. So on a day-to-day basis, that's basically what I'm doing is trying to make these very long, complicated rulemakings as simple as possible so our members can understand, and then get that feedback back to the agencies.
Fantastic. I appreciate you doing everything that you do every day, Mickey. I am a huge advocate for community banks all around the country, and so I think it's great what ICBA does day in and day out. And I think that was an excellent explanation. I've covered a lot of stuff here on the channel from ICBA. Like I love the advocacy and action that gets put out quarterly, and I always cover that just to say, hey, here's kind of the hot button regulatory topics, if you will, going on right now. So you guys, the organization does a wonderful job. And, I know everybody in banking appreciates everything that you guys do for sure. So with that being said, so our topic here for today is called the 1033 rule, otherwise known as open banking. So we're going to cover, ICBA put out a great guidebook, which we're going to get to in a minute. But before we get to that, I was hoping we could kind of set the stage just for a couple of minutes and give a little bit of background on, I don't know if you could kind of explain to us, like, what is open banking? Kind of how did we get to the point that we're at right now? And why did ICBA feel that this was an important enough topic to basically create an entire guide for it?
Sure. So the big thing that's happening sort of in the open banking world right now is the CFPB has just finalized this rule implementing Section 1033 of the Dodd-Frank Act. So obviously the Dodd-Frank Act was passed in 2010, so it's quite a long ways in the rearview mirror now. But the Bureau has finally gotten around to finalizing this rule to implement this section of the Dodd-Frank Act, which basically says that covered financial institutions have to make available to their customers certain financial data, certain financial information about that customer, and it has to be in kind of a standardized machine readable format, so a standardized kind of digital format. And I think, the Bureau has interpreted this statutory provision, Section 1033 of the Dodd-Frank Act. They've interpreted this section to create basically a right of data portability for customers. And so the way they've interpreted it is that customers have the ability to go to any financial company, financial services company, whether that's, a bank, a credit union, a fintech, and to give that company authorization to access financial information about themselves. And that's basically the essence of open banking, is that customers can, open a bank account with your bank, but then share information about themselves that you may have. So, and again, the examples of that kind of information would be like, their account balance, but it would also be things like, do they have auto pays set up? Do they have a direct deposit coming into the account? It also allows them to transfer the ability to initiate payments in and out of the account, like, for example, via a routing number. And so basically, a financial institution has all those different pieces of information about each of their customers. And what this rule is designed to do is basically create a standardized way for customers to be able to move that information from financial institution to financial institution. So I think that's the premise of open banking.
Yeah, no, absolutely. That was a great explanation. So, but but if I can, and you can let me know if I'm going too far off topic here. But so I think you guys basically created this guide because we've gotten. I mean, we have gotten to a. It's very interesting because I think we've gotten to this point. But I believe there is still a big lack of awareness around this rule. I mean, it's very interesting. I talk to a lot of bankers, and they're like, open banking, what's that? And I feel like, some people, when you say 1033, the light bulb goes off and they're like, oh, okay, 1033. Other people, it's open banking. So I feel like there's still a little disconnect out there. So that's why I thought it was wonderful that, ICBA decided to create the banking guide that they did. And but is that kind of where you guys were going with it? I mean, did you guys feel that same kind of, hey, we need to put something out there because there's not quite enough awareness yet in the industry around this?
Well, I think for sure it's definitely an issue that's maybe not at the top of a lot of people's radar screen. And I mean, frankly, there's just been so much going on in the regulatory world between CRA and 1071 and all of these other massive rulemakings. This one has kind of gotten lost in the shuffle a little bit. And I think that the thing is, so right now, the way a lot of this data sharing works is through something called screen scraping, right? And that's basically where your customer goes out and gives their login credentials to another third party company, to a PayPal, a Square, something like that. And that third party company logs in directly through your online banking portal. So there are some downsides to screen scraping, right? There are some security concerns about allowing these third party companies to come in and log in. But the upside of it is you don't have to build anything else, right? As long as your online banking portal works and can handle the volume of web traffic, then those third party companies can just log in and access that information that the customer allows them to access. The difference with this 1033 rule and with the sort of open banking framework is if you are a covered institution under this rule, meaning if you are a financial institution, if you're a bank over $850 million in assets, you're no longer going to be permitted to allow screen scraping. So that process by which customers have been sharing their data, if you're a covered institution under this rule, that's going to go away for you. Instead, you're going to be required to create what's called a developer interface, which is basically a software layer. They call it an API, an application program interface, that sort of sits between you and these other third parties. And then that third party company presents the customer authorization to that software layer. And that software layer sort of mediates access to that customer's financial account. And so the advantage of that is it is sort of an additional level of security, layer of security, because the third party is limited by the API as far as what they can access. They can only access what the customer gives them permission to access. But the downside is, for a small institution, this is a really big technical challenge to build this software layer and to create and maintain all of this.
Yeah, no, absolutely. And again, we'll come back to some of the kind of maybe a couple of the concerns at the end. But so that's perfect. Now we kind of set the stage. So now what I'd like to do is I want to bring and just kind of show everybody the screen here. So if anyone out there is interested in getting this open banking guidebook, you can go to www.icba.org and you can look at, I think it's under the all products, product details tab. And so what you do is you just come right here, or you could do a simple Google search for ICBA open banking. It'll come right up. You can bring up the website, just click download now, and then boom, here you go. And then you got the ICBA guidebook right here. This came out in January, just last month. And so we're just taking a quick look at the table of contents. It does a great job of giving you a lot of the background here. What is Section 1033? Background on the personal financial data rights rule, coverage of data providers, compliance dates, definitions, covered data, exceptions, developer interface requirements, consumer interfaces, denying access to third parties, responding to requests, requiring authorizations, standard setting bodies, and then conclusion, and then continue the conversation. But I really love this because I thought it really did a great job of really covering a lot of ground in a guidebook that's basically 15 pages. So it's, again, you could read through this in only a few minutes, which is fantastic. But what I was hoping to do with Mickey was, Mickey, could you maybe give us just a couple of the highlights of this report and maybe talk about some of the maybe the 2 or 3 things that might be the most important to people out there?
Sure. Yeah. Well, so I think, again, like I said, one of them we kind of covered, which is that if you
Yep.
are a covered institution over $850 million in assets, then the sort of current approach of screen scraping, that's not going to be permitted. And you're going to have this requirement to build a developer interface. This developer interface, one of the challenges with it in this final rule is that banks are prohibited from charging any fee associated with the creation or the maintenance of this database. And so there's basically, this is something that the government is requiring you to build, but is saying that you can't charge third parties any fees for accessing this information. So to us, that's really a significant downside of the proposal, because you have this big technical lift up front, but without any ability to charge for it. There are some good parts of the proposal. I mean, there are, for example, tiered implementation deadlines. So, for example, the smallest covered banks below $1.5 billion in assets won't have to have this portal stood up until 2030. Banks that are in a little bit bigger than that, their dates are going to be 2029, 2028, and here you can see the different dates on the
Yep.
screen. So I think that that's a good part of the rule, is that this is not something that you're going to be expected to do tomorrow, but it is something that for a lot of small banks that are not going to be able to build this in house. It's something you're going to have to really work with your cores and other service providers, and make sure they're able to comply on time. Because it's something where you're going to be dependent on third-party companies to do a lot of the compliance, and but ultimately you're going to be responsible for compliance. So I think that's definitely a big challenge. I think.
Uh,
Oh, go
or
ahead.
I said no. I was going to say so. Let me ask you this, Mickey. So I think of CECL. If you're familiar with CECL, current expected credit loss a few years back. That kept getting delayed a little bit. And then because a lot of the smaller banks were really struggling with okay, we got to pull in all this historic data because it was really, it was night and day difference from anything that they had done before. And I see some similarities with this in terms of like the rollout and the dates. But let me ask you this. A lot of banks kind of waited, honestly, until the last minute to pull all the CECL stuff together and kind of get something out there. With this seems like kind of a heavy lift, if you will. What would in other words, if you say you're $1 billion bank and you have to comply with this by April 1st of 2030, which is basically about 5 years from now, let's say, when should they really start working on this or getting serious about this if they're gonna hit that deadline and be able to comply with this? Do you have any thoughts on that?
Well, so I guess I would temper my remarks, or kind of condition my remarks, on the fact that we have just had an election,
Mhm.
and so the new administration hasn't weighed in on this rule yet. Now, this isn't like as partisan as some of the other regulations out there. There's not necessarily a Republican or a Democrat view on this, and actually, 1033 had pretty considerable bipartisan support when it was enacted. So I don't think you're likely to see this rule like completely scrapped or like totally overhauled, but there may
Mhm.
be some changes at the margin. So I would say at a minimum, I would wait until we know where the new administration is going. But
Okay.
with that being said, we do know that open banking is going to be implemented in some form. And I think this is where, financial institutions, just by virtue of what they are, by being banks, you're going to be a data provider. You have information about your customers that you're going to be required to provide access to. But on the other hand, this rule also allows you to be a data recipient. It allows you to sit on the other side of that transaction and go out and get information about customers of your competitors. And so, from a competitive point of view, there's an argument, I think, for setting this thing up really as soon as possible, because that puts you in a competitive position where you can now go out and access information about your customers' competitors, or I'm sorry, your competitors' customers, tongue twister, and try to win that business, right? And so because you're going to be a data provider by default, why not try to get yourself on the other side of the equation too and actually win some business instead of just playing defense? So that's how I kind of look at it from a perspective of, there might be an advantage to getting started early.
Okay. No, I think that's an excellent point. And I do think you make a great point about the administration, because I think that, again, I think that there will be, I'm sure, some people that will basically make arguments against certain aspects of this. I think the monetization issue. I mean, there's no profit motive per se for banks to want to do this at the moment. And I think that that could become an issue with this. I think the kind of cybersecurity that goes with this whole thing and around it, that I think that becomes another issue. So yeah, so I absolutely agree with your point on that. I think we do have to be a little patient, and we do have to wait, particularly over the next, say, 6 to 12 months, to see kind of what happens with this whole thing and how it plays out. But like I said, the point here is to basically bring awareness to this, is to get this on people's radar so that they understand. Like the big push I wanted to make was that I wanted people to understand that this guidebook was out there, that it's a great resource, that people can definitely go check it out. But that being said, so we covered, I think, a lot of the big points here. Is there anything else here that you think people should key in on at the moment?
Well, let me just go back and talk a little bit about the privacy part of it. And so, when you talk about the kinds of covered data, that is the data you're going to be required to share. Some of it is pretty innocuous, right? Some of it is like, account balance or transaction information, or, the customer's name and address. But then there's this key part in there that's also, you have to provide information sufficient to initiate a payment out of the account. So basically, that's the customer's account and routing number. You may be required to provide that information to third parties if they receive customers' permission. Now, if you're sharing that information with another regulated financial institution that's subject to, the Gramm-Leach-Bliley Act, that's regularly examined, maybe that's not such of a concern. But you might be, under this rule, required to share that information with third-party companies that are not as regulated as banks are, and maybe don't have examiners coming in and looking at what they're doing from a data security perspective. So to me, I think that's really, again, one of the shortcomings of this rule, which is, well, it does say that third parties receiving information have to basically comply with the Gramm-Leach-Bliley Act type requirements. It doesn't do anything to examine those institutions to make sure they are complying in fact. And so, from a bank's perspective, where you're receiving customer authorizations from companies maybe you've never heard of, how can you be sure that those companies are doing enough to keep your customers' information safe? And again, it's one of those situations where, if there is a fraud at that third party, or if there is a breach and your customer's information is stolen, they're not going to blame the third party. They're going to blame the bank, because the money's coming out of their bank account, even if the breach took place somewhere else. So I think, for the new administration, this is definitely going to be something we're going to keep pushing on. There needs to be, the Bureau itself needs to do more to supervise those third parties to kind of mitigate that data security risk, because otherwise, I just don't think it's practical to expect financial institutions to vet every possible counterparty that might request data.
Oh yeah, no, it's a fantastic point. And then, and I also find it interesting too because you do have this whole third party vendor, third party relationship conversation going on right now because of the failure of Synapse Financial Technologies, and and that's kind of gotten mixed in with broker deposits, which is a whole nother conversation. But it is a great point that you make there. I mean, with the emphasis on third party, if you want to call it vendor management, third party relationship management, um, it brings yet another dynamic to this thing that like you said, it needs to be fleshed out more. There needs to be more, just I think deeper thought, deeper analysis of that part of this whole thing to try to figure that out. So I agree. I think it's a great point. I agree with you completely on that, Mickey. Um, so, well, I'll say that. So I think we've covered a lot in here. So let me ask you this: what do you think happens, say, over the next 6 to 12 months?
So I think with regards to 1033, it's really difficult to say. I think the agency's priorities are going to be focused on other regulations first. I think at CFPB specifically, I think there's going to be a lot more focus initially on some of the rules about fees, about overdraft, about NSF fees, the junk fees. I think that this administration is probably going to roll a lot of that back. I think 1071 is going to be a big priority for them to try to fix that rule a little bit. And so all that to say, I don't think this is going to be not the first thing on their docket that they're looking at. There is also a lawsuit challenging this rule. The Bank Policy Institute, which represents sort of the larger banks, they have challenged this rule, basically saying that it exceeds the statutory authority given to the Bureau by the Dodd-Frank Act. So watching that litigation too, that may have an effect about whether this rule ultimately is implemented or if there's legal problems with it before it can be fully effective.
Got it. Okay. Excellent. Excellent. And yeah, and I think that is a very important distinction to make for people that don't know. Like, this is not a law. This was not like the CTR, like the Corporate Transparency Act that was passed passed through Congress. This is just a rule. It was passed by the CFPB, and that's where it originated. That's where it came from. So it's not a law. It wasn't passed by Congress. It's a rule that came from one of the financial regulators. And just as Mickey said, that rule is being challenged in court right now through a lawsuit, and we'll have to see. We'll see what happens there. But um, any final thoughts, Mickey, on this topic right now? Anything you think we missed or didn't cover?
No, I think we've gone through a pretty thorough overview of it. Maybe the only thing I would also mention is that there is a place in this rule for third-party standard setting, right? And so right now, the Bureau has recognized this consortium called FDX as a third-party standard setting body. So they set basically what the technical specifications for these APIs that share data are. And the reason I bring that up is that ICBA is a member of FDX, so we're in there sort of contributing to those technical standards, but also just to any banks out there that want to get involved in standard setting or that have, a more technical sort of background. FDX is always open to new members. So if you do want to play a role in setting the kind of technical standards for open banking, there is an opportunity to do that.
Oh, that sounds wonderful. I think, yeah, hopefully there's a lot of banks that now, if I wanted to put something on, can I add is there like a link or something I could add, just like the FDX's website or something along those lines? Could people find the information that way?
Yeah, I mean, you can Google financial data exchange fairly easily, and that'll take you right to them.
Okay, perfect. That's fantastic. So, um, okay, anything, I don't know, anything else on the plate or anything I mean, outside of open banking, is there anything else you'd like to highlight or throw out there while you have a minute,
Well,
Mickey?
the only thing I would say is it's going to be with the new administration, it's going to be a busy few months in Washington. I mean, obviously, we've had kind of a tsunami, a typhoon, whatever you want to call it, of regulation in the last 4 years. And I think kind of examining and re examining that regulation and finding out where there's opportunities to kind of dial some of these rules back and make improvements. That's what ICBA is going to be, working on in the next few months. And hopefully, we can bring you some good news in the near future.
That's fantastic. And so, So I'll wrap up, Mickey, by I always ask if people want to follow you, or if they want to follow ICBA, or if they want to get in touch with you, what would be the best way for them to do that?
Sure. Well, they can send me an email at mickey.marshall@icba.org. That's Mickey like the mouse. Or you can follow me at Mickey D. Marshall on Twitter/X.
Excellent. Fantastic. And just so everybody knows, there will be a link down in the description to ICBA's website, along with a link to the open banking guide, if anybody would like to click on that and go check it out. I will try to put a link down to FDX as well. So that information will be down there below. But Mickey, I cannot thank you enough for just spending some time to come on. I think that open banking is a huge topic. I just wanted to try to bring more awareness to this. And I thought that when I saw that ICBA had put out this guide, I thought it was absolutely fantastic. I really appreciate ICBA spending the time and the effort to put something like this together, to get it out there for bankers, so that hopefully a lot of people in the banking business can understand what this is and what they need to do next. So great job on the part of everybody there at the ICBA. And all I would say is, I hope you'll come on again. I mean, I would love to have you guys, anytime you guys got a regulatory issue or something big that you want to talk about, please feel free to come back anytime.
All right. I appreciate having the opportunity to talk about it. Thanks, Joe.
Absolutely. So thank you again, Mickey. All right, everybody. So that was Mickey Marshall with ICBA. We can't thank those guys enough for coming on. And I hope that everybody found this episode very informative. Obviously, over the next 6-12 months, I'm sure there'll be a few twists and turns. There'll be a lot more information to come on the whole open banking topic. But for right now, I think it's important to just get familiar with this topic, understand what it is, understand why it's important, and why your bank really needs to be looking at this thing and investing some time, and definitely trying to understand what it is and how you might need to work with it as time goes on. But with that being said, I'll wrap up by saying, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel. I hope everybody has a great day, and I will be back to everyone again real soon. Thanks a lot.